So yeah, so these are a question. I think Paras. All right.
Please wait for a few minutes.
Recording.
Okay.
All right. Just let us know when it's done, right, Paras, so that the user can start. Okay.
Ma'am, now it started.
So it has started already? Okay. Am I good to go?
Yes, sir.
Okay. Thank you, Paras. Welcome, everyone. Welcome to the British College Distinguished Guest Series. And what a guest we have today for you. Tim Gocher is the founder and CEO of Dolma Impact Fund, the first private equity dedicated to Nepal. Prior to starting Dolma, Tim has had a distinguished career in financial services industry. I think it would be accurate to say that Tim believes in the power of market in solving the big socioeconomic problems, which he has successfully been implementing in Nepal. He is also engaged in various philanthropic activities in Nepal, including the Dolma Foundation. Now, before I give the virtual stage to Tim, let me briefly tell you about the structure of the event today. We'll first, of course, have Tim's lecture, which will be followed by a discussion between Tim and myself. I'll have a few questions of mine, and then I will also ask some of the representative questions that the students and the external guests have sent us. I want to apologize beforehand if we cannot accommodate all the questions, since many of you have sent questions. And towards the end, we'll probably allocate around 20 to 30 minutes for the questions from the floor here. So please feel free to type your questions in the chat box as well. So yes, without much delay, let me welcome Tim for his lecture.
Thank you, Sujit. Good morning, everybody. Pleasure to address you. I can see the numbers are fairly good for attendance today. So thanks for the intro. I'll give a little more flavor to the intro first. It comes across reading my bio that I've worked at lots of big global companies, which is true, but I've also very much been an entrepreneur. And after my first work in London at Deloitte and JP Morgan in New York, I started a company called Virtual Frontiers, which was a software development firm focused on the internet. So the very early days, this is 1996, I think we started. And my first career was in technology and banking. And I used that to, with a partner from Morgan Stanley, to write software for big organizations to really bring them onto the internet, especially the back end. So I then did an MBA. I then worked in investment banking again, and started another company, which I sold. So throughout this career has been a series of entrepreneurial activities. And let's face it, the only way to capture real wealth is through starting a business or owning shares in a business. And my career took a distinct fork in the road in 2009, shortly after the financial crisis. I was working for an American billionaire as investing their family office money in Asia. And of course, the financial crisis hit. That affected very much the family office, who were a real estate focused company. And I really had to figure out what to do. At the same time, I had been running and was running Dolma Foundation, which is a charity, a UK charity, focused on Nepal, focused on education. We'd made some quasi investments, although we didn't get the money back. We plowed any profits back into the company, and that was through a project called Dolma Ecotourism, where we essentially were a tour operator, but to remote poor villages in the Rasua area. And so I had some experience in Nepal, and I wanted to start. I was left essentially with nothing to do, right? I lost my job, or the company shut down. I spent a year or so writing a book, doing all those things I wanted to do. And eventually I saw the rise of what's called impact investment. And that takes many forms. It can take the form of either in a developed market like the UK, if you like, subsidized investment that at least gets its money back. That can be called impact first investment, where the main target is impact and the secondary target is to get your money back. But I increasingly saw and liked the model in developing markets of what's called finance first impact investment, which is what we practice. Essentially, we, Dolma Impact Fund, are a private equity and venture capital fund manager focused on market rates of return. And we measure certain impact variables like employment, tax paid, CO2 averted, etc. And we measure how they progress over time if you follow a market model. So ours is purely commercial capital, but we are measuring the impact. Before I tell you what that impact is, let me step back a bit and explain what Dolma Impact Fund does. Dolma Impact Fund, actually Dolma Fund Management, is the fund manager of two private equity funds. Dolma Impact Fund 1 started in 2014. And it raised 36 million from international institutional investors. And it has been investing in Nepal or in companies with the majority of their presence, which really means headcount in Nepal. And you may know of some of our investments. We have invested in hydropower, 2 plants. We've got the first PPA solar plant in Nepal. We have some healthcare investments. And today's lecture is about tech and the effect of technology and the technology revolution on developing countries and specifically Nepal. So Sastadil, Cloud Factory, Fuse Machines are some of our investments from our first fund. And then during the pandemic, the pandemic for many, I, like everybody else, was sitting at home, and we managed to raise a second fund. And the second fund is bigger. It's currently just over $50 million. And we're still fundraising. We hope to get to 75 million. And I think that lesson taught me a lot of things. First of all, it taught me that capital markets and investment activity don't stop just because we're all sitting at home. In fact, in many ways, especially in technology, they increased. The second thing is that when you're raising a second fund as a fund manager, there is a lot of track record for potential investors to look at in their due diligence. And, you know, I was extremely proud, both for the Dolma team, but also for Nepal, to raise a second fund. Because if you like, the first fund could have been seen as a test. For Nepal, there is no track record. We were the first international private equity fund investing in the country. Now there's a track record. How did the investments perform? How did the team perform? And so having now successfully raised that second fund, I think that's a big statement of confidence, not just in our team, but in Nepal itself, that you can, despite the political turbulence, despite the difficulties in the business climate, you can raise money for Nepal based on the merit of a track record. And I think that's a big deal for Nepal going forward as it tries to attract more foreign direct investment from quality international investors. So that's what Dolma Impact Fund does. We invest usually anywhere between $1 and $7.5 million per investment. So we're not a startup investor. We are, if you like, the M of the SME, but we're looking for either high growth companies, and I'm going to talk in this lecture specifically about technology because that is the high growth sector. So that's a bit about my background. I do some other things. I have an academic life. I am on the faculty of the University of Nottingham, where I lecture on things such as this and Entrepreneurship in Emerging Markets. I also lecture at London Business School, where I did my MBA, where I do also entrepreneurship in emerging markets. I also teach a course, or part of teaching a course, on infrastructure finance in emerging markets. And so as we go through today, I'm very happy for you to, I'm not going to be monitoring the chat, but I'm sure Sujit will, to add questions, and I'm sure he will filter them. So let's get started. That's enough about myself. I'm in the middle of a storm here. I'm in the UK. We've had 3 days of extreme storms. So I hope you can't hear the wind buffeting my windows. We've lost some fences and some roofs, not us, but hopefully the sound quality is okay. So let's get started. We are in the middle of a revolution. And that revolution is a technology, a digital, and a social and cultural revolution. If you like, you can trace these industrial revolutions back to the 18th century in England, with, of course, the first industrial revolution of the steam engine and production, which very much gave Britain and then other Western countries a huge leap in productivity. You then had various other revolutions, and they're variously called the manufacturing revolution, the telecoms revolution. But all of these required infrastructure. And if you track global inequality, you can see that actually global inequality started with the first industrial revolution. Before that, before say 1700, the world was pretty much equal. Everybody was agrarian, everybody was farming, essentially. And there were very few industries of any scale, very few entrepreneurs. That really started with the first industrial revolution. And that kicked off inequality both within countries. So the social upheavals that have gone on in, say, the UK, where this all started, were enormous when you had the workers and the owners of production. The whole political theory around capitalism and communism sort of stemmed from that. And it created huge inequalities of wealth, which remain today. And actually, national inequalities have, after reaching post-Second World War, after declining with the social welfare state in Western countries, the National Health Service, free education, etc., they have been rocketing since the 80s, when a lot of liberalization of markets started to happen. So we're really in the West at a peak of national inequality. But I think we're too fixated on national inequality. And what we really should be thinking is about global inequality. Global inequality has also reached a peak. And for me, the reason for that is that these industrial revolutions of the past required infrastructure. So if you take a country like Nepal and think how it could benefit from the manufacturing revolution, well, really, besides some amazing entrepreneurs like Gold Star Shoes and things like that, it's very, very difficult for Nepal, with a lack of flowing water, a lack of reliable power, terrible roads, no railways. It's almost impossible to be competitive in a global manufacturing market. And that's just one example, but that's just one country as well. Of course, a lot of sub-Saharan Africa is exactly the same. So it's been very difficult. And as countries have grown richer, both the developed world and the emerging markets like China, to some extent India, where they have been able to participate, it's left the, if you like, frontier markets, or sometimes called least developed countries, behind. And so we're seeing that global inequality grow. Something, though, has changed, and this is the new revolution, and this is the digital revolution, sometimes called the fourth industrial revolution. If you want to start a digital company, you no longer need, you just need power and internet. That's it. And you can get that in Nepal. Bandwidth is fairly good. With the cloud, you no longer even need a physical server or set of servers or a backup system. You really just need a laptop plugged into the internet. And that has equalized the barriers to entry. So what is the difference between a software company in California or Kathmandu? I would say that the difference is perhaps education and culture. I'm going to come to education a bit later on, but let's talk about culture. Culture of this industrial revolution is sweeping the globe and minds no borders. So what I've seen, if you look at Nepal since 2014, in 2014, if I had, say, my parents had paid for a good degree at the British College, for example, they would expect me to go and get a job in a bank or a good company. That is no longer the social pressure. I think that people who start companies either out of university or get some experience in a company and start companies are looked at very differently by society, because there are lots of examples. Read the newspaper. This really started in the South Asia region in India, where we've seen lots of examples of successful tech entrepreneurs listing their shares on the stock exchange, becoming wealthy, creating wealth for thousands of others. And we've seen now the first examples of that in Nepal. And that culture spreads very quickly. And it spreads through social media, it spreads through video conferences, it spreads through travel, etc. And so we've seen this incredible spread of a new culture, the culture that, if you like, emanated from Silicon Valley and emanated to Europe. I think Europe has been transformed as well, but ultimately it gets equally to the developing markets. And so I think family expectations, society expectations have helped to encourage people to take some risks to start businesses. And so we've got this incredible environment now. You've got the opportunity to create wealth on a very large scale without large capital investments that have to overcome an infrastructure deficit. And if you just look at our portfolio, so let's take our Fund 1 portfolio. We generate employment through our companies for about 5,000 people. About 3,500 of those are in technology. So the employment opportunities, both for high-end software developers, and if you like, a lot of people in Cloud Factory are working to manage databases for American and European companies. Some of that work really just requires you to speak English and use the internet. So it's fairly entry level. So the employment opportunities in Nepal and in other developing countries are absolutely enormous. They can grow like wildfire. And what they're doing is not just giving 5,000 people and 5,000 families good employment, good income. They're also bringing a knowledge transfer. So if you're working for an international quality, or in some cases an international company in Nepal, you're building your CV. Even if you're just entering stuff into a database, you're still working for an American client with quality control, with project management. And so this is, again, part of this revolution of knowledge transfer, entering international quality that goes on a CV and lasts a lifetime and spreads throughout companies as people move jobs. So this is the environment we're in. And we are in Nepal. I am not, but I will be next month. And what does this mean for Nepal? What does this mean for investment? I am going to start. I'm going to stay on a global theme a little while, and I'm going to slowly narrow into Nepal and what that specific tech investment market is about. Okay, so I'm going to talk about markets, capital markets, investment markets. Where to begin? Where to begin? Perhaps with the financial crisis and the cutting of interest rates. So we're back in 2009 now. It's emergency time in Western countries. And in order to, the banks start going bust, economies are collapsing. To avert another Great Depression, banks slash interest rates to zero and print money to try to stimulate the economy. And during that period, and until very recently, interest rates have stayed near zero, or in some cases, less than zero. And that has created a problem. And that problem is where our savings go. Where do our savings go? Our savings go into pension pots, into savings accounts. And there are these huge asset managers that manage that wealth, that aggregate that wealth. Either they are asset managers themselves, they're pension funds. They're also insurance funds, which collect our premiums for, say, life insurance, which won't pay out until, say, 30, 40, 50 years from now. So they need to make investments in order to pay those obligations. And what's happened in the very low interest rate environment is they have relied on fairly safe investments like corporate bonds or government bonds. Now, let's say I'm a German pension fund and I took on a lot of obligations in 2007 when the German 10-year government bond was paying, I don't know, 3%, 2%. And now that German government bond is paying minus 1%. Well, I've got a big problem because I'm not going to have enough money to pay out my obligations. This is what's called an asset liability mismatch. And so what do? I have to take more risks, or I'm not going to have the money to pay my obligations. So I start by investing in the stock market. And then I realized that private equity and venture capital can give me, it's riskier, but can give me a lot more return. And what is private equity and venture capital? Well, what it typically means is funds that invest in private companies, i.e. unlisted companies, companies not on the stock exchange. And that money is typically locked up for a period of years, usually 10 years. And so the investor has to commit that money on day one, and they won't get their money back until towards year 10. And so that's a big lockup of capital, but it is giving and has traditionally given much higher returns than public stocks and certainly of bonds. So over time, with the race for yields, the race for returns, these big investors have been piling into private equity and venture capital to the point where, as of December end of last year, $2.3 trillion of capital is dry powder, is investable money managed by private equity and venture capital fund managers. That's increased specifically in technology, and that's increased through the pandemic. That's increased by, since December 2019, that's increased by 600 billion. So what we're seeing is a lot of private equity and venture capital looking for a few global assets, and that has pushed up prices. Now, we have seen a stock market correction, and there is a relation. So we have seen, since the rise of inflation started, say, 6 months ago, we've seen a stock market correction, the S&P down maybe 10%. And that will have an effect on private equity, only that it limits liquidity, it limits those companies growing and listing on the stock exchange. But we're seeing no signs of that. So we're in a cultural and digital revolution. We're at a time when there's more money than ever to invest in these companies. And so, you know, for me personally, obviously we manage a tiny portion of that money. But I think we're in an incredible market environment to match the cultural and the digital revolution that we are going through. I'm going to start now moving in to talk a bit more about Nepal and the Nepal gap. So what we are seeing as a fund manager is no shortage of deals. There has been this wave of entrepreneurship, people starting businesses, and we are approached by hundreds of companies, and we can only do sort of 4 deals a year, say. And so how do we select those? I think a lot of this is about scalability. Now, Nepal is a peculiar market. It's peculiar. There's nothing peculiar about it in terms of the digital services and products that can be offered to consumers. It's peculiar in how difficult it is to do business. Neither is it a small market. Okay, it looks small compared to India and China, but if you're in Europe, 30 million population is a pretty big country. So it's not small. It's growing faster than India in digital services, because in India, you're starting to see a level of saturation in things like e-commerce and fintech. They're still growing very fast. But from Nepal, it's starting at a much lower penetration. So you're seeing a much higher level of growth. And so to me and to the world, it should look like Nepal is the land of opportunities, until you arrive at the Department of Industry and try to put your money to work. And then you realize why it is difficult to do business in Nepal. It is bureaucracy, extraordinarily slow and delayed processes, and this puts a lot of people off. And I'm sure anybody in Nepal that's ever tried to do something simple, like buy a house, get a driving license, let alone register a business, take on share capital from abroad, this is very, very difficult. And of course, we focus on Nepal, and that is okay. It's very rare that we have a rejection. It's very rare that, for example, we're a foreign direct investor. It's very rare that we are not allowed to bring our money in. I don't think that's ever happened, but it can take up to 13 months from the day we've signed a binding legal investment agreement to get money in the bank in Nepal. If I sign an agreement, Fuse Machines, for example, are an American head office, I sign the deal and I send the money the next day. In Nepal, it might take 13 months before you can send that money, and a lot changes in 13 months. Valuations change, things go wrong, things go right. And so by not accepting money, Nepal is putting itself at a great disadvantage. And if you look at the statistics, we track money which in foreign direct investment, we track money which has been pledged. And by pledged, I mean legally signed, binding investment agreements which have been lodged with the Department of Industry to get approval to bring money in the country. And we also track the statistics from NRB, the central bank, which says how much cash actually came into the country from those FDI applications. And typically in a normal year, it's about 60% of capital gives up somewhere along the way, and about 40% gets through. But when there is a investment promotion year, an investment summit, of which there's been a few, that ratio goes up to 90% of capital gives up and only 10% gets through. So there's an incredible difference between Nepal and India. What India did some years ago is it scrapped all that. It let money in, and then it started. Of course, countries have an obligation to check that that money is clean, that to go through anti-money laundering and know your customer procedures. But what India does is it lets the money in, it makes sure they've got the money first, it puts no barriers to that, unless you're investing in some restricted sectors like defense. And and it does check, and it has the right to kick that money out. So within 30 days, if you haven't heard from the Central Bank of India, your money's good. If you have heard, you may need to send it back if they don't like it. But the difference is the power of the bureaucrat. Does the bureaucrat have the power to not let that money in the first place, or do they have to actually justify why they're going to kick that out? So this is the first thing that you understand in Nepal. It's very, very difficult to do anything in business. And am I going to say that that's changing? First of all, I would say that it's not so bad that you can't do it, right? And that is why we've managed to raise a second fund. We have invested capital, we have sold capital, we have made a profit. It's just very, very difficult, and much more difficult. And what I would love to see in Nepal is a level playing field. So we have a team of people that know everyone at the Department of Industry, the Central Bank, the NEA, the DDA, whichever regulatory agency we do business with. Obviously, anti-bribery and corruption is a huge thing for us. Most of our money is sovereign, either multilateral or bilateral money. And we cannot be seen or engage in any style of corruption. So what that means is, we need to know everybody. You know what it's like in Nepal. Oh, come on, mate, push that, give us that stamp. Let's move it to the next desk. And, we've seen some absolutely remarkable behavior in these bureaucracies. I certainly won't name anybody, but, why does this happen? Talked about corruption. That's one thing, but it isn't just corruption. It's also a fear of the bureaucrat being implicated in corruption. And what is the incentive of a bureaucrat to sign something? Well, what if I don't sign it and I do nothing? I cannot be accused of receiving a bribe to let that through by the Anti-Corruption Commission. So it's better for me, if I do nothing, I'll get my pension. If I do something, I put myself at risk. So it's better for me to do nothing. And that is the sort of incentive structure. And so you see an environment where these anti-corruption commissions, which have sprung out throughout the world, very much part of the World Bank's plan, in some cases have actually made bureaucracies much more fearful of being progressive. Another thing is just lack of knowledge. They know that they have to check money laundering, for example, but we had somebody who shall remain nameless checking our money laundering documents. Now, our money comes from either very super high net worth individuals or from, ultimately governments. And so it's about as clean as you get. We have to do our very serious anti-money laundering checks. But we had one of our investors, they were looking through who our investors were. And one of them was a very high net worth Scottish man who banked with Goldman Sachs being one of the world's largest investment banks. And the paper was waved at my Dolma colleague. There was a letter from Goldman Sachs to say, it's been through our anti-money laundering, he's got plenty of money, he's good for this, a sort of letter of good standing. And this letter was waved at us, and the bureaucrat said, who's this guy Goldman Sachs, and what right does he have to write to me? Now, he didn't know who Goldman Sachs was. And so you're dealing with that level of a gap of knowledge of, foreign investment, anything foreign. And so it's not as simple as it's corrupt. That is definitely part of it, but there's much deeper things. There's a lot of reforms that need to go on. And this is not unique to Nepal. You would tend to find that in the more frontier, poorer markets, that this is fairly common. But it's not impossible, as Dolma have proved, as other funds have proved. BO2 is an excellent fund. It manages money from IFC, the World Bank, and the British government. It's made a number of successful investments in Nepal. It's also had some great exits. There are some new funds starting, which are private equity venture capital funds. And here again, they see the problem of doing business in Nepal. So some time ago, the SIF regulations were introduced by Sabon, which allow you to register a domestic fund. And it's great. It's a great piece of progress. A number of funds applied a very, very long time ago. Meanwhile, nothing's been approved. Then the chairman had to step down from Sabon, and we've seen none of those approvals. Now, so it isn't just Dolma, it's everybody experiencing these delays. And frankly, if a chairman has to step down, that happens all the time in every country, for whatever reason. It doesn't mean approvals have to stop for 6 months, 12 months until there's a replacement. But what that means is that we're trying to do deals. I talked about the size of investments. I talked about the high rate of growth in Nepal. And if you like, as venture capital investors, our challenge is to get Nepali companies over the hurdle, to get Nepali companies to the point where they can gain interest from bigger international investors. Dolma is the bridge to the international capital markets for Nepal. And so what we need, if you take a company like Sastadil, it's grown at 1,500% over the last 5 years in its top line. But that's not profitable, right? You're trying to get market share, you're investing in technology, you're trying to compete with what's Daraj, which is ultimately owned by Alibaba, which have much deeper pockets. You need to raise capital, and Dolma alone cannot do that. Dolma and BO2 cannot do that. You really need a much broader ecosystem. So at the moment, with so many investment opportunities, the problem for a venture capital fund manager like us is not competition from others, quite the opposite. We need more capital in this market. And so we are trying to do deals which co-invest with some of these new local private equity venture capital funds, but they're not able to do it because they've been sitting waiting for their license for 6 months. And deals don't wait, right? I mean, cash is needed, companies are growing, share prices are set. So it's just another example. But I do think that once those investors get their license, it will give another way of Nepalis to invest in their local economy. And I think that will make a big difference. Let me come on. How are we doing for time there, Sujit? How long do you want me to talk for before you open for questions?
Tim, yeah, I think you can take another 9 minutes.
9 minutes, great, will do. So I will finish the main talk with some examples of the companies we've invested in. And let me start by saying this. Nepal has an advantage, and its advantage is people and the type of entrepreneurship that people employ in Nepal. And that is what I would call extreme resilience. Resilience, not just because of all the things I've said, all the things that you have to overcome, but resilience because of what the country's been through. I mean, there are long-standing entrepreneurs that have run their businesses throughout the Maoist rebellion, earthquakes. I mean, I'm telling you, this level of risk management is not something you're taught in a Western business school. And so the combination of drive and resilience is astonishing. I am amazed by Nepali entrepreneurs. I'm going to start. Well, I'm going to give, I've talked a little bit about Sastadil. That's been an incredible experience. I think Amun Tapa is exactly that type of resilient, driven entrepreneur. Cloud Factory has been a really great experience. And if you like, it's the poster child for an impact investment. And so they raised their own cap. They started in Nepal as a Nepali company. They are selling services to data services to mostly American clients. And those types of services have become more and more to do with artificial intelligence, databases. And that could be anything from self-driving cars, where the algorithms need a huge amount of data to be fed into that. Some of that data is video and photograph frame data where somebody needs to click on every stop sign, every line in the road, every obstacle, and that feeds into these AI algorithms and ultimately helps to run the automated vehicles safely. It could also be massive amounts of insurance data from what they call a data lake, which is, data in different formats everywhere that need to be formatted and put together in the format that can be received and processed by the AI algorithm. And so this had this concept of a cloud worker, which could either be in one of the cloud factory offices or working from home. Actually, that model has proved itself very resilient in COVID-19, where everybody was working from home. And the middle layer software, which manages that workflow and throughput and quality control, has proven very scalable. They also have an office in Kenya, and that's because of resilience. So if there is an outage and they're doing mission critical work, an earthquake, for example, that you have a backup effectively. Now, what they went through was a lot of problems doing business in Nepal. So they started as a Nepali company. They started selling their services to the US. They had employees or consultants or sales staff in the US, but they couldn't send their money on time. You imagine a digital company is making payments all the time abroad, but there's no way of making a digital payment. You queue up at the central bank, you get a few signatures. They were literally going to default on their obligations, not because they weren't making enough money, but because they couldn't pay people. And you're not allowed to, as a Nepali company, set up a subsidiary in the United States or anywhere. And so they had to. Fortunately, Mark C, as the co-founder, was a Canadian citizen, one of the co-founders, and so was able to set up eventually a UK holding company. That's a great shame, because what that means is that the profits for the company, of course, and the shares change hands in the UK. There is a profit to the Nepali company, but it's going to sell its services to the UK holding company at a fixed cost plus instead of what the market will pay. But that aside, they managed to get through that structuring, and they have grown and grown and grown until I was on the board when we went out to raise 25 million in fresh capital. We had invested about 5.5 million. We were the lead investor in 2 of the rounds of funding. And then finally, we felt this is big enough for the global market. And we did attract venture capital from large multi-billion-dollar venture capital funds, including FTV. And I was in New York meeting one of these investors, on the top of a high skyscraper. And I'm thinking, this is a company we invested in, from a small office in Kathmandu. And now here am I sitting talking about, a $40 million ticket size for an investment in that same company in New York. And in following a commercial model, we managed to employ thousands of people. We managed to train thousands of people. We managed to pay a lot of tax in Nepal. And of course, everybody we paid a lot of tax. So we really generated a very high impact in employment. It was the poster child for the digital revolution in Nepal. And of course, we were successful with that transaction. And actually, they were given $65 million by investors. And they took $25 million, and the rest was used to buy out some shares, including some of Dolma's shares. But we remain a shareholder. But I think that story highlights how you can be successful and what success looks like. But it also highlights the difficulties of doing business in Nepal and why it's very difficult for Nepali firms, why exports are so low. I'm often asked by politicians, how can we increase our exports? And it's very difficult if you're not allowed to set up a subsidiary abroad because you've lost your profit. That is booked abroad if you have to have a foreign holding company. Fuse Machines is a similar company, and it's similar in the sense that it's providing AI services to to foreign companies, mostly American companies. But in Fuse Machine's case, it's high-end AI software development. These are software engineers. And they have also got an American holding company because the founder, Samir Maski, became an American citizen. He got his PhD at Columbia University in artificial intelligence. An incredible guy. And so we've got the same issue there of structure. And our investment, of course, goes in the US. We have recently, Fuse Machines have recently welcomed BO2 as a co-investor. They've invested in the Nepal entity. So it's great to work with other Nepal-focused funds. But this company is growing like mad. And it highlights another issue with Nepal. And I talked about the education gap. And I'm just going to finish on this point. Of course, they are providing virtual teams to Silicon Valley companies, major American companies, companies like H&M, Time magazines, insurance companies, healthcare companies, etc. And so, of course, they expect their virtual teams, doesn't matter where they are, sitting in Kathmandu, sitting wherever, to be of enough quality to work for the best of the best. And, you know, of course, a graduate in computer science from Tribhuvan University is not the same as an MIT graduate in Boston. And so Fuse Machines have been training people. They've got a customized course. Actually, Samir is still a lecturer at, he's an assistant professor at Columbia University. He's used their content and Fuse Machines built training engine to train people in a year's course to get them to that point. So if you like, this is a little bit like the infrastructure gap, isn't it? You know, this is a little bit like, I can't get reliable power for my factory, so I've got to buy a diesel generator, or I've got to fix my lorries and my trucks a lot more because the roads are terrible. It's a little bit like that. Unless the education quality grows, you will have to invest to fill that gap. But this is just a business case, right? This is a cost of doing business. It's cheaper, obviously, to pay an AI developer in Nepal than it is in California. And so there is a cost gap. Can I afford to train graduates for a year and get the best of the best into my employment and still make a profit? That's just a business case. But so what I've highlighted in those two examples is, one, the problems of structure and the limitations of Nepali companies being able to hold shares and subsidiaries abroad. And the other is the knowledge gap. But I think I want to leave you on a note of, you know, astonishing optimism. Whether it gets better or not, I certainly hope it does. I hope that investors in Nepal feel like they have a level playing field. If you look at Nepal's goals to attract various figures, pick you one, you know, $10 billion in the next 5 years in, you know, energy and climate change and whatever. $10 billion in the next 5 years, $2 billion a year in foreign direct investment. The current number is around 100 to 150 million. So it's got to go up, you know, sort of 10x, more than 10x. And that isn't going to come from Nepal investors. It's not going to come from development finance institutions or the World Bank. It's got to come from big international investors. And Dolma enjoys doing business in Nepal. It has a team of people that knows everyone at these regulators. BO2 is the same, but we are very small. JP Morgan, my old company, is the type of scale that they would need to invest in Nepal. And JP Morgan are not going to set up an office in Kathmandu anytime soon. So what we need is for the bureaucrats to, if you like, get out of the way, do their job, do their valid job of checking the quality of money, making sure there's no money laundering going on, but do that using online tools. Devolve that to the banks as they do in most other countries. So it's the banks themselves that check and the banks that are liable for taking on dirty money. And really just let people invest in the country, let businesses start, let businesses get licenses. And that will create the level playing field that we all want. We don't want Dolma to have a monopoly over private equity and venture capital, far from it. We want investors with different skill sets, with more capital, so we can help Nepali companies get to, foreign capital like we did with Cloud Factory. That's really our goal. So, despite it all, we have a very positive outlook. We have a brand new fund. We're investing 50 million starting last year, and we're looking for the best of high growth, scalable companies with that kind of leadership team that shows the drive and the resilience, which is so unique to Nepal. I'm going to stop there, Sujit. I'm going to take a 2-minute break, and then I will take some questions.
Sure. For our guests, please feel free to type your questions in the chat. In the later half of the question answer round, we will probably also open the questions to the floor, so you can ask your questions yourself as well. Okay. And we'll start the question answer round as soon as Tim comes back.
So this is just one quick point. Participant can also share the questions in chat box, I believe.
Yes, they can do both.
Okay, sure.
Okay, Sujit, as we get questions, I know the first are going to come from you, but perhaps the person that's asked the question, or certainly if the person is asking direct or it's their question, I'd love them to be on video. This is the fun bit. Imagine I'm standing in front of you in a lecture hall. I wish I was. And let's make it as interactive as possible.
Yeah, perfect. Thank you, Tim. That was incredibly insightful. I think we learned a lot from the talk. At least for me, I got a lot of information about Dolma, the kind of projects that you invested in, the challenges of doing business in Nepal, of course, and the promises that the fourth industrial revolution brings to developing and underdeveloped countries like Nepal. But let me push back a little bit on that final point about the promises of the fourth industrial revolution to countries like Nepal. Now, of course, it is true that it can help the underdeveloped countries bridge the gap with the developed countries, since it does not involve the massive investments. That was the point that you made. However, an opposing argument could also be made that the companies in the developed countries and the emerging countries like China, they have already gone so far ahead in the learning curve that the distance between the economies is likely to even more increase, or the divide is even more likely to grow. No? So of course, now we can have all those low-paying jobs that the people in the United States would not do. So we can have those things here. But when it comes to the actual value creating things, we're so far behind, and these advantages are going to take the big companies in the United States and China and Europe so far ahead that we'll never be able to catch up. So that increases the gap. Wouldn't that argument also be valid?
No, I don't think so. I think what is valid is we, Nepal, have to do what we can do, right? So in this supply chain and value chain of the digital market, Nepal is very unlikely to create the next Google, Facebook, AI algorithm. It's not going to generate intellectual property, which is going to go global. That's pretty unlikely. What it is going to do is be able to adapt international innovations like fintech, digital payments, online banking, challenger banks, e-commerce. One of our newest investments is Upaya City Cargo, so logistics aggregation. It's not inventing. It is inventing software, but it's copying the models of others. But it's a very different market, logistics in Nepal compared to the UK. So there's a lot of innovation there within Nepal to be able to do that. So on the one side, you've got the products. What are the products and services being offered to Nepali consumers and businesses? And that's what you're talking about. It is possible that a new Google, a new whatever starts in a new Tesla starts in Nepal, but it's fairly unlikely. And I think therefore what we're better off doing is looking at the supply chain. Either it's the product and service companies which are selling products and services to Nepali consumers and businesses, and that's the SASTA deal, Upaya, Kathmandu, F1 Soft, etc. Isewa. And then you've got the service companies which are plugging into the global supply chain of services. And this is not a low-cost sweatshop, right? So you've got Fuse Machines far from it. Well-paid AI software engineers being trained up to be of American quality, working for American companies, albeit sitting in Kathmandu. Even the cloud worker at Cloud Factory gets paid 3 times the minimum wage, and I had the most incredible experience once. One of my many jobs was as the chair of the British School of the Board of Governors, and one of the cleaners came up to me. She didn't speak English, but I spoke broken Nepali, and she said to me, "Thank you so much." She knew I was on the board of Cloud Factory. "Thank you so much." And she smiled and grinned, and she handed me a piece of paper with her son's name on it. And she said, "He's a cloud worker. He's supporting our family. He's so proud of his job," and it was an incredible thing. So this is a long way from sort of sweatshops in Bangladesh of garment factories or whatever. This is a good environment to work in. So I think you can split the opportunities in Nepal into 2: the products and services facing the consumer and business, and how can we adapt international technology and business models to the Nepal market, and then how can we Nepali companies make money by servicing those IP creators. But I think it's a folly. I mean, I'd love to see it, and I'd love to invest in it if the new Tesla or Microsoft does come out of Kathmandu.
We all hope so, but like you said, I think we're just that might be too optimistic. I hope. So another question that I had, team, was now, of course, with the digitized world, we have the Nepali companies have the opportunities of going abroad and taking the opportunities that different parts of the value chain will give to the Nepali companies, like Fuse Machines or any other companies that you have invested in. But at the same time, it is also true that the foreign companies also have the chance to come and compete with the Nepali companies in the Nepali home market. So in that case, how do Nepali companies compete with them? So I think another way of asking that question would be, how does Sasto Deal compete with Daraz, who you like you mentioned, we have like extremely deep pockets, and probably all this knowledge that they get from Alibaba there, right? So how do Nepali companies compete?
Well, I think that's a perfect example, and you're going to see the same tension play out in logistics and fintech, and of course everything else. The first thing to say is that protectionism is the worst thing Nepal could do. So let's say Nepal said, oh, we're not going to let foreign investors in fintech. We're going to let e-Sewa take the market. Well, that will break eventually. The consumer will see that, I don't know, Google Pay or, some giant pay for you, the Indian company, will eventually offer more and more better services because they've got much more capital, much better technologists. And so to try to stop Alibaba or whoever it is in whatever market taking over or investing in Nepali companies is a real mistake, because what will happen is eventually those companies will fail. The people will demand, and it is a democracy, the people will demand the kind of services. Nepal is a bit of a walled garden, and anybody that's tried to order from Amazon from Nepal will realize that. And eventually that will just break. So you'll think, I'm going to protect Nepali companies from these big beasts like Alibaba, and that's going to help Nepal. No, it's not. No, it's not. What they'll do is they'll come in anyway. There'll be nothing to invest in. They'll just elbow the local competition out of the way and win the market. And all that money and a lot of the employment opportunities will flow abroad. So the best thing to do is to embrace partnerships. Now, what Daraj did, of course, Daraj isn't a Nepali company. Daraj is I can't remember where it's domiciled, but Pakistan perhaps, or Sri Lanka. It services South Asia outside of India. And that's a very smart move, actually, because India is having a fierce battle. If you like, that is Amazon versus Walmart, effectively, as Walmart own Flipkart. So, there you see the foreign domination. But what happened? Yes, Amazon started, but Flipkart is the best example. Flipkart and India benefited enormously from the huge investment from Walmart. That went to Indian shareholders. That continued employment of Indian people. It didn't outsource everything to America because it was so established in India. So in the same way, Alibaba buying Daraj, yes, okay, Daraj has most of its technology and central office services in a different country, but they still kept, some benefit to Nepal. Likewise, what is Sastadil going to do strategically? Well, it's tied up with Flipkart, and they have an exclusive partnership with Flipkart. One thing that's selling very well is the Mintra fashion brand in Nepal. They have a tie-up with Pepperfry in India. And so if you like, maybe we're seeing the sort of India versus China sort of proxy war playing out in the e-commerce market in Nepal. But there's no doubt about it. Sastadil will need to either be bought by or get investment by a foreign group. Hopefully, before it can do that, it can get more investment from Nepali, or at least Nepali-focused investors, because the more you can build a domestic company, when the inevitable happens and a big company comes in, they're more likely to buy the local player or invest in the local player and do their business through Sastadil in this case, instead of just coming in directly and taking all the profit out of the country and not having as many employment opportunities. So my advice to government is, do not let protectionism happen. Again, we're not going to create the intellectual property. We're not going to create the world's greatest e-commerce or fintech payment systems, but we can create companies which are a channel for foreign capital to retain and grow employment and prosperity in Nepal.
Yeah, thank you, Tim. I think that's very well said. So what do you think is the state of entrepreneurship in Nepal in general right now? Are you excited? Are you optimistic? Are you happy with it right now?
Very excited, very excited. I think because the quality of business, it has two things: the quality of businesses and the quality of employees has grown remarkably. If you, on the business side, just because of this culture that I taught, this sort of wave of international culture, we're seeing people who understand more and more how to put together a business plan. What is venture capital? You know, we don't charge an interest rate. We're not debt. You know, we have different needs. We're going to share the risk. We're going to share the upside. So we're seeing a lot more awareness. We're seeing a lot more international knowledge of comparable businesses abroad and how they're similar and how they're different. I'd also say that the quality of employment, if you look at Dolma's staff in Kathmandu, we started out hiring people, well, everybody's Nepali. I am the only non-Nepali, and my wife's Nepali, so I'm almost Nepali. We are hiring now almost, well, I can't remember the last time we hired somebody back from abroad. But our first few hires were all people from Nepalis from the UK, US, wanting to return home with their degrees, with their experience. So again, that speaks to the culture. It also speaks to the quality of education. And I think the British College are actually a big part of that. I had the pleasure, I am on the advisory board for the British College, and I had the pleasure of attending a graduation ceremony when I was there in January, I think, or November, one of my trips. And it was incredible to see the internationalism, which I think is the thing that creates, even if you can't travel abroad and study at the University of West England, you effectively do. And you have that kind of education and you have the kind of exposure in sessions like this, for example, to international thinking. And that really creates a group of people looking for work who have this international mindset. And another factor, I think, is the banking system. The banking system in Nepal is extremely professional for Nepal, right? It's not the world's most advanced in terms of bond markets and, you know, things like that, but it is largely clean, uncorrupt, professional. And it's something I'm actually studying at Nottingham University, is how did the market for banking become so professional? And I think a lot of that goes back to the 80s and Standard Chartered's investment and, you know, Nabil Bank, etc. It's foreign investment and the knowledge sharing that precipitated. But I think we're hiring a lot of people from the banking sector as well. So, you know, I think the quality of entrepreneurs, I've already spoken about that, and the quality of employees for Dolma or for the companies we invest in has really taken a step change in the right direction.
Yeah, I think what you just said towards the end is, I think, a key to developing entrepreneurship in Nepal, that part where you have started attracting people who would otherwise go to banking or who have been working in banking, because I think it is an industry in Nepal that has been sucking up all the talent. You know, when I was working in Norway, that was the same thing there, but it was, instead of banking, it was the oil fields, the oil companies would suck up all the talents, and all the other industries would then be like, they cannot compete with the oil industries in terms of payments and everything. But now that people who have been working in the safe jobs in banking, if they can be attracted into entrepreneurship, if they can go and work in entrepreneur ventures, I think that is going to be an incredibly good thing for entrepreneurship in Nepal. Anyway, so I have a few more questions here, but I can also see that we have a lot of questions from chat coming in. So I will ask a couple of my own questions and then go to the questions that the students have sent. And then eventually we will come down to the questions from the chat. But can the people who have just typed in the chat, if you want to just ask your questions yourself, I think that would be even better. So towards the end, I'll open the floor for questions. And why don't you guys ask your questions yourself? That'd be fine. Okay. So let me ask one of my own questions, and then I'll go to the students' questions. You know, Tim, in venture capital, what we hear a lot is that the venture capitalists often invest as much in the entrepreneur as they do in the venture, right? Is that true for you guys as well? Do you also look at the founders of the businesses that you're investing in? And if you do, what are the kind of qualities that you look for in the founders?
Yeah, definitely. A business plan is never going to be met, right? It might exceed the expectations. It may fall short. Certainly the strategy in digital anyway, the strategy will change because the markets, the competition is moving so fast. So what we're looking for, number one is the management team, the entrepreneur, the entrepreneurs. And what we're looking for first is trust, right? I mean, and this isn't, this is anywhere, by the way, this is venture capital anywhere. You're really putting your money at risk. And what you want to know is when the chips are down, how are they going to act? Are they going to steal your money? And so looking at that track record, gaining trust is by far the most important thing. Of course, soon after that, if you get over that hurdle, is talent, international thinking. And by international thinking, what I mean is an awareness of competition or benchmarks abroad. We are looking for also a corporate culture international thinking, which means I know I have to be fairly transparent to my board and my shareholders. I'm not going to try to hide things. When things go wrong, we're all in it together. And the board is, and the shareholders are there to help, not to punish you. So, we're looking for that sense and understanding that transparency in business, whether things go well or things go badly, is the best collectively for all of us and for the entrepreneur. The worst thing that can happen is they tell us all the good things, they hide all the bad things, the company goes bust, all of a sudden the board never got a chance to help, to recapitalize, to use their contacts, to, whatever else. So, we're really looking for that sense of transparency. So those are by far and away the most important thing, the trust, awareness, and thinking and transparency of the management team.
Yeah, absolutely. Absolutely agree with all of those things. Tim, thank you. Now, let me quickly move on to the questions that the students have sent. Like I said, there are way too many questions for us to include all of them. I'll just try and pick up a few representative ones. So the first question that I've received is, how did the pandemic affect Dolma Impact Fund and the companies that it has invested in?
Okay, so our tech companies, it has benefited for obvious reasons, perhaps, with a few exceptions, like you couldn't deliver anything for a few days, there's a total shutdown of everything, but obviously e-commerce has boomed. What do we call it? The virtual nature of Teams has helped Cloud Factory and Fuse Machines, most definitely. It's put a spotlight on the need. One of the holes in e-commerce, whoever you are, is delivery and logistics. And, Nepal is not the easiest country to deliver, especially outside of the Kathmandu Valley. So one of the things that it made us realize, us being perhaps the Nepal e-commerce market, is just, well, we can service the Kathmandu Valley, but, maybe Pokhara, but we can't service, provincial centers. It's not profitable, it's not. And so from here springs companies like Upaya City Cargo, which can aggregate and get an economy of scale of the underlying assets, be they four-wheelers, two-wheelers, big intercity trucks. And, instead of them getting, say, a 30-40% utilization, they can use these platforms to get an 80-90% utilization. And you're not investing more capital, you're just using the efficiency of an online platform to drive and bridge that gap in delivery potential. What's going to be really interesting is now you see quick commerce, very much the the buzzword in India and other countries, we're going to deliver to you in 15 minutes. You know, that's the next thing that we're starting to ramp up. And so if you like, you're seeing the beginnings of a separation or an addition of an aggregated logistics market. The e-commerce companies will have their own delivery, but there's no way they can scale and deliver all over the country. That's a different thing. And so it's definitely boosted e-commerce and therefore all the things that go along with it: fintech, payments, online banking. So, you know, digital services and digital products, it's been a huge thing. It's also affected our portfolio negatively. We were constructing hydro and solar plants, of course, shutdowns for a while, sending everybody back to their villages. It's definitely delayed that. Things delayed on the border. It's affected healthcare. We have a hospital which really has been very negatively affected. And you'd think that's strange, right? You know, surely hospitals have been booming. Well, yeah, when there's a real peak of COVID, it's you know, boom time, and then nobody wants to come to hospital because they don't want to catch COVID, right? So all of those other things, you know, I've got a kidney problem, I've got a backache, I've got a, you know, whatever, they're staying at home, and that this is a burgeoning health crisis in Nepal, and by the way, all over the world. In the UK, I'm a governor of the National Health Service in my local county. And we're seeing the same thing here. You know, the hospitals have spiked, but people with cancer, for example, aren't coming to get their treatment. People who need a knee replacement aren't coming for the operation, even when COVID is down, because they're so scared of catching COVID from a hospital. So actually, it's been disastrous across the world for hospitals at a time. So it's boom and bust. You know, there's a peak of COVID. Let's make some money because we're not going to make some money for a few months. And so I think obviously in time this will play out, but I'd say the most negatively affected has been healthcare.
Right. Hopefully that will not have a long-lasting impact in any sector, to be honest. But anyway, the second question that I have for you, Tim, is how does fund like Dolma exit an investment in Nepali company? What are the practical exit options for you guys? Okay, so I mean, you've got two options. You either list on the stock exchange, or you sell to a private buyer, either foreign or local. And so what we are doing with the stock exchange in Nepal is a strange beast. It's a little bit like the banking sector. It's not very advanced, as in valuations and selling at a premium. You can now sell at a premium. But the book building process, you know, this concept of selling hydro shares at 100 rupees per share is really weird, because the founder sets the company up with 100 rupees per share. Dolma comes along when they sign a PPA before construction at 100 rupees per share, but by then you've added value. Surely you've got licenses and teams and bought the land or whatever you've done, and then you do construction and you've added more and more value, and hey ho, you IPO at 100 rupees per share, but the real value is probably 300 or whatever it is. And so this bizarre, you all stay at 100 until boom, instead of being able to do premium rounds, because nobody will invest at a premium if you know you're going to sell your shares at 100 in a year's time. That said, it's a known thing. You know, eventually the price, as long as your plant is well built and will generate cash flow, you know that it will go up. Hopefully it'll reach some sort of market equilibrium. And so we're IPOing this year our two hydros. One is a Sanima plant in I've forgotten the name of where it is, but it's 28 megawatt plant. Another is a 13 megawatt plant in Dolma, which I've just visited. And so you've got the stock exchange, but really the stock exchange is good for energy stocks. It's good for banking. It's good for insurance where they're mandated.
I think what we, and I think also the leadership of Sebon would love to see more real economy companies. And so we'd love to see hospitals listing. We'd love to see more, there are some hotels, but more hotels listing. I think the problem is going to be tech companies. The NEPC is not NASDAQ. And with the limitations of sort of book value, Nepal has a habit of putting prices on things like foreign debt. You can lend at LIBOR plus 5.5. Well, where did that 5.5 come from? That's not a market figure. That's somebody in the central bank invented that. And if the market happens to demand a higher interest rate from that, nobody will lend to Nepal. And I think there's something like you can't IPO at more than 2.5 times book value. Well, 2.5 times book value is okay if you're a big industrial company with lots of assets, but if you're a tech startup with a couple of laptops, 2.5 times book value is not very good. So, what's Twitter's, valuation to book value is hundreds, and so, but I do think that Sebon is, with its hitch with losing its chairman, is moving in the right direction. I mean, it is a professional market. You do trust the market to an extent, at a level where other markets in Nepal may not have that same customer confidence. So that's one thing. So that's progressing. It's good for some stocks, certainly with real assets. It's good for energy stocks. For tech companies, it's going to be either local businesses that want to buy these, local banks, for example, in fintech, local private equity companies that are now starting, if they get their licenses from Sebon, and of course, foreign investors. And this is where the slightly peculiar thing in international venture capital markets at the moment is that the ticket sizes are very high. So if I'm trying to raise $5 million, it's really hard. There's not many people, not many venture capital players. If I, Dolma, go out into the market and say, I own shares in a Nepali company, I want to sell them for 5 million. There's no interest. It's too small, because a deal is as difficult at 5 million as it is as 50 million. Plus, I've got to get to know Nepal and all its peculiarities. So I'm not going to bother. There's just not many buyers. If you can be raising ticket sizes of, say, 40 million, which I think is the magic number at the moment, you get a lot more competition for your shares in the international market. Now, and that is because what we're seeing is venture capital is now itself under competition from, I talked about those pension funds and asset managers. I should have added sovereign wealth funds. They are now directly investing in venture capital. So they used to be the investors in people like Dolma, the fund managers. They're now going direct. So, read the newspaper and you'll see Temasek, Singapore's sovereign wealth fund, investing directly. You'll see a Canadian pension fund investing directly in a tech company in India, instead of investing in a venture capital company, which will manage the money. So all this competition has pushed the ticket sizes up. So I'm going to get a higher multiple on my company if I can ask for 50 million. But if I ask for 5 million, there's going to be no takers, or I'm not going to get a very good deal. Now, the problem Nepal has with that is, it is a small market economically. It may be a big market population, but it's a poor country. And so the scale of revenue, how do we get companies to the scale of revenue that could possibly justify asking for $40–50 million? That is the number one issue if you're going out for foreign investment. And that is a trend throughout the venture capital market globally. And that is why we need more investors in the local market.
Thank you. So I've received some questions regarding the macro environment in Nepal. I think team has touched upon a lot of those things during his lecture as well. So I'm going to just pass on those at the moment. So instead, here's one question for your team. What inspires you the most? Okay, it's one of the students was asked you. So what is it that inspires you the most?
Oh my God. You know, this is my dream job, you know, and I suppose I created the job, so it would be my dream job. I have worked in so many different fields. I've worked in banking, technology, energy, and I've had my own businesses. But can you imagine a job which is more rewarding? That, you know, I have a personal love for Nepal. I'm married into the country. I've been doing, albeit charity, philanthropic work in Nepal since 2003. Can you imagine helping the country you love by creating sustainable employment and prosperity? I would challenge any aid organization, if you take our $36 million in our first fund to generate employment of 5,000 people sustainably, as long as the companies don't go under, if they keep at least flat or growing, that's sustainable employment. I challenge any DFID or USAID to show me you've deployed 36 million and you've deployed in perpetuity employment and all of the economic benefits that come from that to the family, to the taxman, etc. 5,000 people. And so the reward, I'll tell you, one of our best experiences, we were sitting in our meeting room, and I can't remember the name of it, but there was a song about a Nepali family where the husband had to go abroad and work in the Middle East, and he's calling home and the wife's crying. I'm sure you all know what do you remember the name? Can you help me?
I think it's Siley.
Yeah, I think that's right. And we all put that on in the office, and we were all sort of, you know, shedding tears and thinking, look, you know, this is awful that the country doesn't generate enough employment, and that mostly men have to separate from their families for 3 years without coming home. They've got wives, they've got children, they live in communities. The pain that causes, and yet 5,000 people don't have to do that because we exist. You know, that is a direct impact. And jobs I've done in the past, you know, you work for a billionaire and you're investing in shopping malls in Singapore. Well, you know, that's great. There's nothing wrong with that, but it's not really, you know, there's another Gucci store on Orchard Road. Whoa, that's changing the world. You know, it doesn't matter. It doesn't matter. This matters. This matters to real people's lives. And that's what inspires me.
Yeah, definitely. You know, so to prepare for today's event, I was watching some of your videos from YouTube, your interviews and all those things. And I came across this video from 2014 at the Transformational Business Networks, and I could clearly see that you're extremely passionate and you're very optimistic about Nepal. And one of the things you're saying there was that when you were launching this thing in the Nepali embassy in 2012, everybody was saying you're crazy. Your wife was saying you're crazy. So just wondering, now that you have come like almost 10 years down the road, what do you think about it? Do they still think you're crazy?
I'm still crazy, but I think that's important. Like, look at you asked what I'm looking for in entrepreneurs, right? I'm not looking for people whose primary goal is to make money. Because if your primary goal is I want to be rich, then you're probably not going to be rich, because you don't have the passion for what you're doing to overcome all of the hurdles that you've chosen. I truly don't believe that Bill Gates sat there when he invented DOS, the disk operating system, or took it from IBM and and modified it. I don't believe his goal was, I want to be the richest man in the world. I think his goal was to have a PC on every desk, to digitize the world. The world is so inefficient. And he's been passionate about that. I don't think Elon Musk is there saying, I want to be the richest man in the world. Okay, I think he thinks about electric cars and the future and the space race, and, you know, he's passionate, right? And that's what we're looking for in an entrepreneur. And it's the same with me. right? You'd be totally insane to think the easiest way to make money and get rich is to start a private equity fund investing in Nepal. That's not. Obviously, I may, it has done well so far, and I may, make money from it. But it can't be your primary reason for any entrepreneurial venture, because you'll never have the strength. Oh my God, it's too difficult to make money. It's so difficult to make money. It's so difficult to win in competitive markets. Every company, we Dolma have, our problem isn't necessarily competition. Our problem is the environment and all of the things you deal with in Nepal, and it's a big challenge, and you have to have a lot of passion to overcome that. And likewise, if I was running a new tech firm in California, I'd have tons of competition. I wouldn't have the government challenges I've got, but I'd have tons of competition. And you need a lot of passion to overcome whatever those hurdles are. So I think passion is everything.
Yeah, right. And I think you very nicely answered what was going to be my next question from the students, which was what would be your advice to the students who aspire to start their own ventures, right? I think doing something that they truly believe in, having a passion on those things, I think that is the one thing that will keep you going when things are down, right? That is something that you really need.
That's right.
Right.
That's right. I think it took me, so what was it, 10 years ago, sort of 40 years old, until I realized what I wanted to do. The light goes on. It's a bit like meeting your spouse, it's not logical, it's boom, that's what I want to do. And you need to get experience, or it's helpful to get experience in different industries before that. But when the light goes on and it, follow it.
Okay. And I've another one related to career. What kind of skills are required by a person to start a career in private equity and venture capital market as an employee in Nepal?
Okay. First, the foundation of that is some kind of finance business degree, preferably an MBA, CFA, chartered accountant. Those are the baselines. Some experience in either banking, especially where that's transaction focused, is probably the best route in. Obviously working for a private equity fund, but there's not many of them. So assuming you haven't done that, there's other routes as well. I mean, we don't just hire investment employees, we hire HR professionals, we hire especially ESG and environmental and social specialists is a very growing market. That's our fastest growing department. Legal compliance, we've just hired somebody from Standard Chartered that was an expert on anti-money laundering. So it isn't just investment professionals, you need a broad team of operations and compliance. But I think, let me go beyond that for a minute. There are lots of people with MBAs and banking experience, and what separates them when it comes down to it? It's the breadth and depth of personality. So what's on your CV that is different? What is the talking point that looking at a CV, wow, you played football for semi-professional football team, and you're a musician, you speak French, or whatever it is, it's that kind of stuff that what I'm looking for is to connect with people. And more with a lot of people having degrees and, some good experience, I'm really looking for difference. I'm looking for that personality to shine beyond the sort of tick box of what you need.
Okay, great. Now, I think I'm going to open the floor for questions. So if there's anybody who wants to ask a question themselves, please raise your hand. In the meantime, I'll ask Suraj and Rizal's question, which is, sir, where do we see Nepal in the next 20 years? Does Nepal hold the potential to compete with economic powerhouse nations by fully utilizing its natural resources and its cheap manpower?
Well, I think it's fortunate that the digital revolution doesn't require infrastructure. And I do think the internet's pretty good. Actually, say 4G is better in Nepal than it is in the UK. I find the quality of 4G, at least on Ncell, it's not an advert, to be amazing. What do I see as the future? I do see the digital market as having an amazing future. What is going to happen in infrastructure? You know, what is going to happen in energy? Is the country going to be able to build the power plants it needs? This is a whole other lecture. I'm going to try to summarize it. Nepal's got itself in a pickle, as we would say in England, by only investing in hydropower, only promoting hydropower, and not being able to build the big storage projects that it wanted to build, which could store up the water in the summer and dispatch it out in the dry season. So it's now spilling power and getting no money for it. It thought India would give a nice trade deal where they offset instead of charged a market rate. Guess what? They didn't do that. And guess what? India's only allowing them to sell from power plants that have an Indian investment, which is a very small amount of that surplus. And so these are things you could have foreseen. There are technologies out there like hydrogen, which can be generated from a surplus of electricity. You generate hydrogen, you store it in a tank, you generate power with it, or fill your hydrogen trucks and heavy machinery with it. So you can spread that supply-demand mismatch. So I think there needs to be fundamental change in two areas. There needs to be a new energy policy which takes into account new technologies. Solar and batteries together generate more in the dry season when it's not cloudy, and they store in the batteries and they dispatch. Hydrogen, run a pumped storage hydropower. These are the kind of energy additions that you need to the grid. So you really need a policy, a set of tariffs around that. But I think most importantly, you need to make it easier for foreign investors. If you're going to build that infrastructure to get billions, that 2 billion a year, with all the questions we have to answer, they're going to run a mile. And they need to benchmark with India. What has India done to make it easier for foreign investors? India still complies with all the anti-money laundering international regulations. So does Sri Lanka. But they get a lot more FDI per capita. So I hope we see that. Times are difficult at the moment in Nepal politics, and that is something I would not dare comment on.
Yeah. But I do want to second you on that issue of Nepal having a good internet. In fact, that was what I was discussing with my students today in the class, that our broadband is actually as good as the one that I used to have in Norway, and better than the one that I had in Australia when I was living there. So it's pretty good. So something to be proud of, I guess, especially considering the value for money, right? Anyway, so there's another question from Sushan, which is about the stock market. I think Tim has generally touched upon it a little while ago. And Sandesh Pandey asks, what key metrics do Dolma Impact look before investing in a new venture, particularly in Nepal? I think you only invest in Nepal, right? So, yeah.
Yeah, we've only got 20 minutes left. If you're comfortable, could you ask me the question yourself with your video on? And then we can just make it more interactive. If you're not comfortable, just defer to Sujit.
Yes, please raise your hands, and I will.
Well, that specific question, was that from the chat?
Yes, that was from the chat.
Yeah, so whoever asked that question, it'd be great to hear from you.
Okay, yeah, Sandesh, are you there?
Yes, I'm here. Hi, team.
Hi.
So my question is, what the key metrics do you look before investing in Nepal, like in investing in new venture?
So metrics very much depends on the sector we're investing in. I suppose this lecture's about technology. So it would depend on, I suppose the main metrics are the path to profitability. So you don't expect to invest in a high growth tech company which is profitable on day one. That's unusual, because these are all new and they're fast growth. So what you're looking for is what's the market size, what's the rate of growth, how quickly can this turn a cash profit? It's going to be years. We know it's going to be years. It's not going to be months. And the other thing we look at is we have a database of international private transactions around the world. And we especially look at India. And we say, in coming to evaluation, when you've got a high growth tech company, you can't use discounted cash flow, right? Because there's no cash yet, probably. So how on earth do you value it? You value it based on how other transactions, so let's say we're investing in a logistics aggregator, what are logistics aggregators trading at in India as a multiple of revenue, say, or a multiple of enterprise value? So we will gather data. Now, a Nepal company won't command the same multiple of, say, revenue, because there's a lot more liquidity in India for capital, and there's a lot more growth potential in India. So we would look at the multiple over revenue and the multiple over enterprise value. We would compare it with India, and then we would discount that price in some way to reflect Nepal. Those are probably the key metrics. And of course, every industry, if it's logistics aggregation, we're going to be looking at the particular metrics of the unit economics. If it's a hospital, we're going to be looking at the unit economics of that particular hospital.
Right. We have a question about passion from Nirvan. Nirvan, do you want to ask that question yourself as well?
Yes, I'd love to.
Okay, go ahead.
Hi, Tim. So,
Hi.
as Dr. Sujit stated, like, what were the steps, or like, what is the way to find what you're passionate about?
Be yourself.
Yeah.
There's a great quote by Oscar Wilde, an English playwright. Be yourself, everyone else is taken. So I think that, I'll tell you what helped me was the financial crisis. In other words, having time to think about who I am. So it's quite difficult in a hot jobs market. You know, you do one job for a few years, you get offered another job. So your career's gone in all directions before you know about it. I found it very useful to have no job for a while, because nobody was hiring anybody for anything for a good couple of years. And so I found it very helpful to literally sit down and think, what is it I want to do with my life? But I think, so it's about connecting to yourself. Nepal has the unique advantage of being quite a spiritual country, where connecting, I think people are more connected with themselves in Nepal than they are in the West, that's for certain. Because here it's just a rat race. The cost of living is so big, you're just trying to pay your rent, pay your mortgage, pay your school fees, whatever it is. But in Nepal, there's it is really interested in a friend of mine, Hemraj Dakal, gave an interview, a podcast, where he talked about his guru. And I'm often having these conversations with people in South Asia where it's common. I think if I said, as a British person, I've got a spiritual guru, people would look at me and think, oh, he's a bit weird. But in Nepal and India, it's perfectly normal and it's fantastic. And it is something that's growing here. I just had a LinkedIn connection from a spiritual healer. That's not weird in Nepal, neither should it be, because it helps you connect to yourself. And only when we know ourselves will we know what we really have a passion to do. So I think try to do the rat race, do the business, but keep a hold of yourself, be yourself.
Okay, great. I don't see any questions in the chat anymore. So please raise your hand and ask the questions yourself. So before we find somebody who wants to ask the questions, I have a question for you, Tim. So research usually shows that there are some kind of biases, especially in the venture capital world. Say we have plenty of evidence that shows that female entrepreneurs are often at the receiving end of such biases. There was a research that came a couple of years ago that actually said that no, it is not gender per se, but it is femininity that is usually punished in the venture capital world. So if there's an entrepreneur who exhibits certain feminine qualities or uses those kind of phrases during the presentations, they are usually punished. So I was just wondering if there are certain mechanisms that you have set within your organizations that make sure that you do not suffer from such biases or blind spots.
It's a good question, a very topical one. I come back to what we're looking for is international thinking, right? International thinking at the moment is looking for diversity of thought, which means probably you need to have people from different genders, races, cultural backgrounds, socioeconomic backgrounds, because you're trying to avoid groupthink. A bunch of white British middle-aged men get together and start a business. Well, you're probably missing something. I do think, though, that we need to be very careful of setting with the best of intentions if you take gender. So let me take gender, because that's a big agenda for us and our investors, and we're very serious about it. And before gender was a word, before it became an agenda, that rhymes, we had already 41% of our team are women. We have 3 investment managers that lead our deals. They're the deal leads, the main folk, if you like. 2 of them are women, the other one's a guy. Now, it's become so fashionable amongst, I certainly won't name any investors or foreign embassies, but we have twice been asked recently to make a presentation on energy in one case. And then the follow-up question is, please, could it be a woman? And to which I said, well, sure, sure, we've got lots of women, but actually the head of energy is a man. And they said, oh, go on, please, can it be a woman? Because it's going to look really good to our investors or our stakeholders. And I felt, I said, yes, of course. So a lady did it, very experienced, but the person who that should have been was a man. And you have to be very careful when you say gender or race or lower caste, or you choose one agenda to the extent that you start discriminating against other people that you didn't mean to in the first place. So the way what mechanisms do we use? We're developing an inclusion policy, okay, which of course includes gender. And that's gender not just for us, but it's also for our portfolio companies. But inclusion also means socioeconomic background. It also means people with disabilities. One of the things we are working on is expanding our pipeline, reaching out to people with disabilities, the blind. How can they work? Now, whether they've had the education, of course, and the opportunities to get into our pipeline, but we're trying to help create that. And if I look at Nepal, but certainly Kathmandu, I come back to my presence at the graduation ceremony a few months ago, and I would say well over 50% of graduates, I think that was BBA and MBA, were female. And I thought that was absolutely fantastic. One of them was my niece, Arati Gurung, who is now studying her MBA at UWE in Bristol. So here is an example of how the British College, I'm not here to sell British College, by the way, but how it can really open up international boundaries. So that was the reason I was there, was to see her. And, so because we've hired 41% female in our team, we haven't found gender to be such a problem in terms of sourcing quality. There's been plenty of applicants. But I tell you where we have seen a complete lack is the Dalit caste and anybody with a disability. And so if we do have a focus in our inclusion policy as well as gender, it's probably in those areas.
Yeah, perfect. So I still don't see anybody raising their hands. So let me just go on and ask a question that I actually received from somebody before the session today. And the question was, what fears foreign private equity investors have in investing in Nepal? So are there something that are very emphasized? Any fears there, team?
Just hassle, hassle and delay. I'm glad nobody's asked me about MCC, but at least you don't take it personally. If the United States of America are having such trouble giving money away, it makes me feel better. Well, when they give us such hassle for trying to do good, for trying to invest money, well, they do it the same to, an enormous, powerful country too. So it's just hassle. There are investors that will never invest in Nepal, but there are investors who are set up to invest in high growth frontier markets. And they are willing to take the risks of lack of infrastructure, of earthquakes, of a bit of political chaos. I don't think they're willing to take the risk of conflict. So you've seen a capital flight out of Myanmar, Afghanistan, and that is why we waited until 2012 to start raising any private sector fund, because it's not, you wanted a good few years after the peace accord. And you've got to say, take a look at the big picture of Nepal. Okay, there's a skirmish going on outside Parliament at the moment, but there's skirmishes outside the British Parliament all the time. This is democracy. It's a messy process. But just look at this from 2003, when I first visited Nepal. I would say the most successful peace process in the world, bar none. Yes, there's been political chaos and it took ages to get a constitution, but there's peace. It's incredible, given the deaths and the level of hatred that the pain that was caused by that conflict. Then you get the 2015 constitution. Yes, it probably took an earthquake to stimulate people to get that, but an inclusive civil society, one of the most progressive in terms of gender, for example, constitutions out there. And now you have a democracy. And somebody said to me when the government changed recently, oh, do you think that will put investors off? I said, no. I mean, the British government has changed, 5 times since the Brexit vote? I've lost count. It's democracy. Parties fall out of coalitions, stuff changes. It's messy, but it happened peacefully by the rule of law. And these are massive achievements that Nepal has done. And business follows that confidence. So yes, there's a period of turbulence. It won't last long. They'll sort it out. I don't know which way it'll go. But, what Nepal has achieved is incredible. And so I don't think political turbulence. I just think the only thing that will really put people off is violence and conflict. And I don't see Nepal going anywhere near that anytime soon.
Great. I think Kavita wants to ask a question. Kavita, please go ahead.
Okay. Hi, team.
Hi, Kavita. Thanks for putting your video on. It's lovely to see you.
Thank you. Thank you for today's lecture. My question to you is, what mindset one needs to have in your thinking in order to be an entrepreneur in a developing country like Nepal?
Okay. Your mindset. Because what you
In
just
general.
did. Yeah,
In
no, I
general.
know. But I'm talking about get noticed. Everywhere you are, get noticed. I had a boss at an investment bank that gave me a wonderful piece of advice. He said, at every conference, every lecture, every event, ask the first question, sit in the front row and ask the first question. Because what that does is after the lecture or the conference or whatever it is you've been at, everyone comes to you and talks to you about that question. You've been known by the crowd, right?
Yeah.
So this is not Nepal specific, this is anywhere. Get known, manage your brand. And what you've just done, Kabita, you're the first person to turn on your video and ask me a question. I now know you, albeit briefly, and you've just done it. So be yourself and get noticed everywhere you can.
Yep.
Got it.
Thank you, team.
Thank you so much.
And
Thank
a
you.
round of applause to Kavita. There you go. Thank you. And
Thank you.
I have a last question for today. I think it's from Ayush, but I think Ayush just says that he is in a very noisy spot, so he will probably not be able to say it himself. So I'll just read out his question. Ayush asks, in Nepal, what is the average time for an exit from a PE or VC investment? I don't find many PE, VC early stage funds in Nepal that actually raise from Nepali individuals. Is it the case, or my search isn't good? I'm interested to enter the small to medium ticket down the line.
Okay, average hold, let me say target hold, 3 to 5 years, but it could be up to 10. You know, if we invest in our first year and we decide not to exit, there could be structural reasons for that to be longer, like a hydropower plant. You list your shares, you obviously have to build most of it, if not all of it first. Then you have to wait 3 years for a lock-in at the stock exchange. So there could be structural reasons, but typically we would target 3 to 5 or 3 to 7 years. Your question is very interesting about Nepali individuals. No, I don't know of any. At the moment, the Sabon regulations are for, I think, only for institutional investors. So a bank could invest in a private equity fund, a company can invest in a private equity fund, but I don't think yet, I could be wrong, but there's no mechanism for individuals to pool their money together and invest in private equity. I think this is something that has to happen. Because one thing Nepal suffers from is a lack of investment opportunities for its own people, which is one of the reasons I think you see hydro shares so high on the stock exchange. It's not because the cash flow warrants it always, it's because there's not a bond market. There's not a corporate bond market. So, you know, if you want to put savings in, well, invest in a hydro share, it's going to pay dividends. It's got quite a good return. So I think we need more and more like that. But I do think Sabon is one of the more progressive institutions, and I do think that will come.
Yes, that is right. In fact, I know a few of my friends who are trying to set up private equity firms in Nepal, and they also they have come under all the bureaucratic hurdles that you said a few minutes ago. But instead of private equity firms, what I think usually Nepalese tend to do, individual investors, is they form an investment company, and that company invests in.
There's nothing to stop, of course, in you investing in a company as, you know, part of a group of shareholders. And long before Dolma comes in, that company's got to grow to a certain scale, so that those friends and family rounds are essential. Yeah,
absolutely. So it is 4:01. Thank you, team, very much. I think it was extremely fruitful. We learned a lot from your experience, your expertise, very interesting questions from the students, from the outside participants, and from the floor today. Thank you all. Thank you, team.
Great. My pleasure. Best of luck to everybody.
Yeah, cheers. Now I think we're going to close the session now with that. Thank you all for your participation. We'll see you in the next discussion series.